Wow, talk about volatile market conditions. Chances are when your end of January statements come, they'll show a loss since the beginning of the year. This was not unexpected and could be considered healthy for the markets. As of Friday, February 4th, the Dow Jones Industrial Average is down year to date about 4%, S&P 500 down 6.17%, and the tech-heavy NASDAQ is down just about 11%. Ugly start, right? A few of those days were roller coaster ride with big swings up and down. We always want to put it in perspective. How far back do we need to go to find the indexes at the same level? For the Dow, December 20th, 2021. S&P 500 was October 18th, 2021. NASDAQ a little farther, June 18th, 2021. So tech stocks took the bigger hit, but they're still up 9.3% since December 31st, 2020. The markets moved higher faster than we thought last year and now are correcting in January, when sellers can push their capital gains into the current year. So while it's unsettling, not concerning at this point. To repeat, we do not think the stock market is going to continue moving up at the torrid pace set over the last 3 years. We do not think the markets are crashing either. Just need to work through the many changes happening right now. So themes to watch. Fed action to control inflation. Chairman Powell and the Fed have moved up the schedule to raise short-term interest rates to tame inflation. The first hike is predicted for mid-March, with possibly 3 more coming this year. This will slow the economy, but overall is a good action. Supply chain recovery. Still catching up, but progress is being made. Shortages also slow the economy, but resupply will help to kickstart things when demand equals supply. Labor markets are still looking for more workers. This will encourage even more technology to replace low-paid jobs. May cause a long-term issue for those less educated or low-skilled. Immigrants can help fill these positions. We don't hear much about border control these days. About Russia and Ukraine, they have the media attention right now. Both Russia and the West are trying to position themselves to appear as tough-minded, so not to lose face at home. Hopefully President Putin will get the attention he wants without going to war. If there is war, there would be a negative reaction on Wall Street. Oil prices may surge on a Russian invasion. February is a key month as the ground freezes there and it's easier for tanks to maneuver. Hopefully tensions will ease soon. Housing. Still a shortage of homes on the market. Most homes are only listed for a few days before offers are made. Interest rates are still relatively low and demand is high, so this should continue to be a bright spot for us. Government action. We don't expect much out of the U.S. Senate for the next 4 to 6 weeks. Did you hear of the New Mexico Democratic senator that had a stroke a couple weeks ago? There won't be any measures put up for a vote until he's ready to return to work. Thankfully, it sounds like he'll make a full recovery. Big revenue surpluses at state government levels will also be interesting to see how that is handled. Long-term interest rates. The 10-year Treasury rate has increased about 0.5% since the beginning of the year, keeping us in a lower interest rate risk position on our portfolios. We predict that long-term rates will continue to drift higher, but not in a straight line. Bonds should be easier to own 12 months from now, but best not to abandon them in the meantime. So what comes next? We've had some clients buy stocks. Best time to buy is when it's scary. But most people are just hanging tight. We avoid selling stocks right now unless really necessary for withdrawals. In a way, it reminds us of the last part of 2018 when the markets were worried about China and tariffs. The S&P 500 dropped 11% in December of 2018 and 17% overall in the fourth quarter of 2018. A drop in the market to allow investors to choose to buy in at a better price. to begin again the next leg up. Well, there's no guarantee that this will happen this time around. There's just not that many storm clouds on the horizon. Notice we purposely aren't mentioning COVID. We need to learn to make it part of our everyday lives and move forward. So thanks again. We look forward to spring coming and coming soon ahead.